how legitimate is JP Morgan's assumption that margins are mostly exhausted in Bitcoin? It makes me think that they are primarily a manipulator to get people to buy. I don't know what you exactly mean by margins, but what I'm assuming you mean is excessive leverage. I want to take you to this chart, which is the weekly chart of Bitcoin. Now, I want to show you something very important here. I want to show you that there's a difference between a market-related decline that is basically a decline that's based on the natural supply and demand dynamics in the market. Bulls versus bears, and which group is more dominant at the particular moment. That's the natural flow of a market. The dynamics that are driving price are rooted in the desires of the buyers, the desires of the sellers, the dynamics of supply and demand. Then there's other market environments that are basically influenced by external factors that are far beyond the natural buy and demand dynamics of your participants. And for instance, in March of 2020, this drop that ignited here, this drop was not the market responding to the natural, ordinary buy and demand and supply dynamics of a market. It was a shock to the system that was being forced on the market from external forces. And all markets experienced this during the crash of March of 2020. All right. We all know what happened at that particular point. Every market, from Bitcoin to gold to the equity market to the bond market to every market in the world, had this unnatural collapse to the downside. It had nothing to do with the normal dynamics of the market. And when you have those markets that are forced by external circumstances, when those external circumstances are eliminated and gone, the market almost immediately seeks parity again. Boom. As if this should not have happened, because it wasn't my natural self, it wasn't my natural market, it wasn't the natural participants that caused this. It was an unfair outside influence. Now that unfair outside influence is gone, and the market snaps right back to where it was before that unfair outside influence. Boom. Is gone. Now, why do I tell you this? It is because of this. If we look at where Bitcoin began, this drop here, this drop was also ignited by an unfair outside influence. This is the contagion drop that has been ignited by the collapse of Terra Luna, which spread to the collapse of firms like Celsius and Three Arrows Capital, which also is now in a contagious way affecting firms like BlockFi and affecting other firms like Voyager and many other organizations that are not big enough to mention. But this is a forced liquidation of Bitcoin that has nothing to do with the desires and the lack thereof of the natural participants in the Bitcoin market. And so this decline is an unnatural decline. All right. It is not communicating a bearish stance on Bitcoin. It is forced liquidations by firms that had tens of thousands of Bitcoin and were forced to liquidate them. All right. And then traders understanding that other firms had to be liquidated and now piling on the short side to force an even deeper drop in Bitcoin. This is not normal. And whatever is not normal will eventually go away, and the market will seek parity right back where the whole thing started. Now, when is this not the case? When does parity not get achieved again? In what scenarios? In the scenarios where the asset goes to zero. So when a market drops, not because of normal circumstances, it either is going to do two things. It's either going to break and go to zero, or once that external force is out of the way, the market seeks parity again, because what caused it wasn't supposed to happen under normal circumstances. And we see this same thing that happened in April, May of 2021. This drop is not the drop. It's not a natural drop of people who hold Bitcoin saying, I'm taking some off the table, I'm taking profits, I'm turning bearish on the asset. Other people coming in, no, I'm buying the dip. This is not the normal ebb and flow of your bulls versus bears. This is an unnatural drop that was caused by China banning mining in their country, which forced, not because of a natural desire, I'm now bearish on Bitcoin. No, I'm bullish on Bitcoin. I'm in the Bitcoin business, but I'm forced to dump all my Bitcoin because my country is forcing me out of the country. I need the funds to pick up all of my equipment and move to a different country and set up there, which is an expensive endeavor. And so the dumping of Bitcoin was not the natural supply and demand dynamics. And because this was not natural, this decline had to come back and seek parity again. You follow what I'm saying? And so it's important for sophisticated, experienced market participants understand the difference between a natural decline, natural supply and demand dynamics, and a forced decline. And those who understand when you have a forced decline will profit maybe a little from that forced decline, but they understand that because the urge to seek parity again is very powerful, they're going to position for the move back to parity. And so what I think JP Morgan is referring to, I haven't seen this quote, I'm trusting that Calvin has lifted it and communicated it properly, is that most of this forced leveraged base liquidation is basically over. I tend to agree. I'm not saying that there can't be slight more downside here, but what I'm saying is that I think we're closer to the end of this forced liquidation phase than we are to the beginning and to the middle. So if we were at the middle, that means that we'd have to double this to the downside. That's, in my opinion, very, very low probability. If we're in the beginning, this has to come down here. That is even more unlikely. So if we're not likely to be in the middle, which means that we've got way more to go to the downside, which I doubt. If we're not in the middle, then we're certainly not in the beginning. And if we're not in the beginning and not in the middle, we're near the end. And when you have determined that you're near the end, it is better to scale in on the downside and build your position. This is what I have my Bitcoiners doing right now. We're building a bigger and more substantial long position, and we're positioning ourselves to this move back to parity where the whole false nature of the decline began. Now, I'm not saying, guys, that this is all forced decline. We know what the market has experienced from November of last year. But this is more of a natural decline. This part is the unnatural decline that is the result of outside influences. But also keep in mind that Bitcoin has historically been the fastest horse in the race and the leading horse in the race. So Bitcoin will turn first. It'll turn before the broad equity market will turn. It will turn before the vast majority of all markets turn, and it will lead the pack in terms of performance, like it always has done, in my opinion. And so this is what we are doing, and that's what I think JP Morgan is referring to. I think that they've been an accumulator like many of the banks have. I can't say that as a fact. I just believe that all the building that they're doing behind the scenes to custody Bitcoin, products to give their clients access to Bitcoin, building trading desk around Bitcoin. This is not because they're not bullish on the asset in the future. You don't do these things if you are negative on the future. You stay away from them. And so 300 plus banks in the United States have been over the last 6 months preparing to basically embrace Bitcoin for their clientele. Goldman Sachs has built a trading desk and basically gave out its first institutional Bitcoin-backed loan to one of its big clients. JP Morgan has basically created institutional products to give access to Bitcoin to their more sophisticated clientele. Fidelity has basically set up the infrastructure for literally tens of thousands of institutional corporate-based companies to give Bitcoin as an option to their companies' 401k plan. So all of this building out of infrastructure behind the scenes by these big organizations is not because the future is not great. It's because they understand that what the future potentially is with this extraordinarily rare, very special asset. So